The month of May has not been a good one for Bitcoin. We've seen the price really accelerate lower over the last week or so. Yesterday, trading back to its worst levels since late January. So what does this mean? Has the Bitcoin bubble burst? Or actually, like every other massive correction we've seen in this cryptocurrency, is it yet another buying opportunity? There's seldom a dull moment with cryptocurrencies, of course. If we look at the volatility of these markets, it takes volatility to a whole new level when you compare it to more traditional markets, should we say, out there. So we saw this massive move in Bitcoin yesterday. Really, it had been selling off for the last couple of weeks anyway, but we saw it go from about 44,000 the day before down to about 30,000 yesterday. We've seen it bounce back since then. Is this just a dead cat bounce? Is this the start of a recovery back up to those 64,000 plus all-time highs? As usual in this video, I'll talk a bit about what's been driving the price lower over the last couple of weeks. Then we'll come back onto the chart, look at things in a bit more detail and see where the opportunity might be. I think there is an opportunity here, considering the size of the decline. But are we going to see it just lurch lower and set fresh lows for the year? Or are we going to see quite a significant bounce from these levels? I'll talk a bit about it now, then we'll come back and look at it in more detail. Hello, I'm David Jones from Capital.com, and there was only one video we could do today, of course, and that was Bitcoin. Following what we're seeing is a crash. I think over the last few days, a couple of weeks, given the size of the decline, I thought, let's take a look at Bitcoin, a calm, dispassionate look at it and see, well, is this actually a buying opportunity, as we've seen so many times with Bitcoin, or actually is it the start of perhaps an even deeper move lower from here? So as usual in this video, I'll talk about what's been going on the last few days, the big levels to watch, then we'll jump back onto the chart and see if there's a trade to do. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday at 2:30 in the afternoon UK time, we do live streams now. So I take a look at a whole load of different markets in real time. If you're subscribed with the alarm bell notification clicked, you get a notification off YouTube just as we're about to go live. Right, let's get into it and see what sense we can make of the current moves in Bitcoin. So just as a reminder, it was only April that we saw fresh all-time highs for the cryptocurrency trading above $64,000. So that was when we saw the last all-time high for Bitcoin. As of yesterday, we've seen this significant decline. During yesterday's trading, the price traded down briefly below $30,400. So if we measure the move from the all-time high to Wednesday's low, the low we've seen so far in this sell-off, that's a move of 53%. It's a massive move. We've got to go back to the February-March period last year to see a move bigger than this. The price fell back then 59%. Of course, we all know what happened. Eventually, it recovered and just rocketed. Is it going to be the same again this time? As ever, there's been a lot of chat about Bitcoin over the last few weeks. We've seen Elon Musk, the boss of Tesla, tweeting on various cryptos, and only a few days ago tweeted that Tesla would no longer accept Bitcoin as payment for its cars, rowing back on a previous decision, citing global warming, climate change concerns there because of the amount of energy used in mining. But I think what really pushed it lower yesterday were some statements from the regulator, the financial regulator in China. It said that its banks were not allowed to offer its clients any services in cryptocurrencies. And I think, this sort of chat over the last few weeks has perhaps been seen by some as a step back for the more wider acceptance of cryptocurrency in society for when it comes to paying goods and services. And I think that's why we've seen, the price of Bitcoin and others take such a hit. But as I said last time round, talking about Bitcoin and Ethereum, volatility is the name of the game in crypto. That's why I think it's an incredibly difficult market to trade. I've said this a few times, I think, because the volatility is off the scale compared to other markets. So I think for new traders, it's great when the market's going up every week and you feel like an investing genius. But when it all goes horribly wrong, like over the last few weeks, what do you do next? We'll take a look at some of the levels to look at, then we'll get back onto the chart and see what the trade is. So I think the immediate hurdle for Bitcoin on the upside, it's only from, a few days ago, 45,800. The high hit 18th of May. After that, on the downside is where things get interesting, some of the levels to look at. The low so far on this sell-off, 30,370. If we see the price under pressure again from where it is now, do we see those lows hold? That would be quite telling. After that, I think the really big level, it's the lows for the year so far, set in early January, coming in around $28,000. So as usual, to put some color on these numbers, let's take a look on the chart. Bitcoin had been something of a lagger. If you look at, for example, the likes of Ethereum had been pushing out to fresh all-time highs in May. Of course, lots of excitement around Dogecoin and some of the other coins. Bitcoin had been fairly subdued since those sort of mid-April highs. But it's been anything but that over the last week. We did see it trade up near 60,000 May the 8th, then pretty much, it halved from those levels by yesterday's low. So I thought, let's take a look at it in a bit more depth. For me, it's all about price action when it comes to Bitcoin. But first of all, let's just take a look at the RSI down here. Or maybe actually, first of all, let's look at the decline, the last major decline we had back in March of last year. So we've wound the clock back. So Feb 2020, the price traded up to 10,500. Then, of course, coronavirus, plenty of markets just plunged. Bitcoin was no exception. And the price had dropped to about 4,000, the lows in March. Of course, we all know what happened since then. Let's see how long it took to recover. So within the space of about 2.5 months, the price had pushed up pretty much back to those old levels, the early the mid-Feb highs. Let's take a look at what's going on now. So let's look at the RSI first of all. Really oversold, which is not uncommon, of course. As I always say, in strong trending markets, RSIs will go oversold pretty quickly in a strong trend up or down. The RSI on Bitcoin has been oversold since May the 16th when the price was at $46,000. It plunged another 16,000 from that level. Really oversold with the bounce that we're seeing so far today. It has dragged it. It's still oversold, the RSI, just about. But if we saw a bit more strength or a bit more stability from here, the RSI would come out of its oversold position, and then perhaps we see it unwinding. But for me, it is all about the trend and the price. So what sort of trend should we pick up on? If we go back to the October lows, mid-October lows, when the price had just started moving and climbing higher, back then it was around $11,000 for a Bitcoin. That trend's done a pretty good job. We were, overextended from the trend line clearly for quite some time. From January onwards, as the price accelerated, got overextended from the trend line. But I think what's interesting is the move yesterday. Yes, it has probed below that trend line on an intraday basis. But if we were looking at this trend, all we've seen in the last couple of weeks or so is Bitcoin return back to its 7-month trend. That's probably only slight consolation if you'd bought Bitcoin at $60,000 and you're sitting on a 50% loss yesterday. But in the great scheme of things, from a market's point of view, we're back to that trend. So I suppose the aggressive trade here is to be a buyer. The only question is where would your stop loss go? And that's a big question. If we let's look at the volatility from yesterday. Yesterday, the high was about 43,400. The low was, let's say, 30,000. So it moved $13,500 in a day. So if you're going to buy Bitcoin with a $500 stop loss, chances are you're going to get taken out. So it's a market that we need to give time to move around. For me, the most aggressive stop on Bitcoin I'd want to place if I was a buyer now would be below the low from yesterday. So somewhere the other side of 30,000 would be one place I'd be looking for a stop loss. Perhaps a more conservative stop loss, give the market a bit more wiggle room, would be the other side of the lows for the year, down at 27.8, 28,000, those sort of levels. I think if we start breaking below there, it does look like this trend is well and truly over, and we have to start looking for much deeper sell-offs for Bitcoin. So I think it's a really interesting one to watch down at these levels. If we're looking for targets, well, if that trend is going to resume, the definition of an uptrend is higher highs and higher lows. Our target, medium term, is for a run back to 64,000 if we're going to see this trend resume, and ultimately breaking that at some point and going on to set higher highs. But let's not get too ahead of ourselves. Let's take a look at the intraday charts and see what that tells us. So we're looking at the hourly chart now. There's the move yesterday. It hit the low between 2 and 3 p.m. UK time. We've seen it bounce back since then. And it's perhaps a bit quieter trading this morning, perhaps a little bit shell-shocked crypto investors and traders given the sell-off we saw over the last 24 hours or so. So for me, perhaps the better trade here is to sit on my hands for a day and wait to see if we get some sort of pullback. What I'm going to do, I'm going to put an order in, let an order do the work for me. So after the bounce back yesterday, the market traded up to 40,500 nearly. Then it did sell off in the early hours this morning, back to sort of 35,000, that sort of area. So what I'm going to do for a buy order, I'm going to assume we might see a bit more volatility. I'm going to put an order in to buy at 38,000. So a couple of $1,000 below where we are now. So that's where my order is going to go. I'm going to leave that sitting there on the platform to buy a dip to 38,000. Now let me figure out my stop loss. Because we don't look at Bitcoin every day, I need to give the market a bit of room to move around. So like I say, the most aggressive place for me for a stop would be the other side of yesterday's lows, the other side of 30,000. There's still a wide stop, but let's not forget, it moved through $13,000 yesterday, a big range yesterday. So for me, I'm going to go 27,500 for a stop. So that if it hits my stop, it's made new lows for the year. And I definitely want to be out of the trade. So I'm a buyer at 38,000 with a stop at 27,500. Let's set it up. So on Capital, I can trade fractional sizes. So I'm going to buy 0.04 of a Bitcoin. I'm going to buy if the price drops to 38,000. It's trading at the moment just above the 40,000 mark. And if that order gets filled, put a stop loss on. Put a stop loss at 27,500. And you can see, looking at the chart now, look at where that order is. That stop loss is only a bit below the low of yesterday. So even though in dollar terms, it sounds like a big stop loss, more than 10,000, in terms of range for Bitcoin, it's not that big at all. And I've bumped the risk up on this. I thought, let's be a bit adventurous because it could be, give the trend one last chance to resume from here. So my risk is £297. That's it. We're ready to go. Let's place the limit order. My order's placed buying 0.04 of Bitcoin. If it gets down to 38,000, if I go to the portfolio and go and have a look at the orders page, that's it. That's the only order I've got at the moment. So buying 0.04 if the market gets to 38,000. If that order gets filled, put a stop loss, $10,500 away, down at 27,500. And we'll see what happens down here. I think it's really interesting that it's got knocked back to this trend. I think I've said in the past, I don't consider breaks of trend lines the be all and end all. So I'm always willing to give a market one more chance, even if it probes through the trend line. But I do think if we start breaking below the lows for the year so far at 28,000, we have to be wary of a much deeper sell-off. You know, when it comes to maybe back to where we were in December, down at 20,000. Let's see what happens, but a really interesting market to watch considering the massive sell-off we've seen over the last few days. That's it for the update. We'll have a look at it again in the live stream on Friday. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.